So the first quarter growth performance and latest indicators show that growth is on a firmer footing. As shared during the bank's EMR release in March, we still expect the Malaysian economy this year to expand within the 5.3 to 6.3% range, driven by higher domestic demand and support from external demand. This is given the normalization in economic activity, especially with the reopening of international borders and, importantly, improving labour market conditions. There are upside potential to the growth outlook. This could come from better than expected employment and income conditions that will support household spending and stronger recovery in tourism-related sectors. However, uncertainties surrounding the outlook remain, particularly from external factors, including prolonged supply chain disruptions amid military conflict in Ukraine and lockdowns in China. So in March, we had already factored in the Russia-Ukraine conflict in our growth projection. And the recent developments have remained broadly in line with our earlier assumptions. So the additional factors about the resurgence of COVID-19 and the lockdown in China especially, this will weigh on global growth. But as we have seen, the number of cases in China has been come down, and the Chinese authority has announced a number of policy measures to cushion the impact of the lockdown on the Chinese economy. So we are confident that there will be that rebound in economic activity once the economy reopens. So although the downside risks have risen on the global front, we are confident of the growth trajectory, and we do not see a risk of any recession in Malaysia. So growth, like what I said, would be driven mainly by domestic demand as we transition into the endemic phase. And, so although we are seeing, the geopolitical conflict and the surge in Omicron cases, the performance of our economy in the first quarter this year does reinforce the fact that our recovery is on track. So, and with the reopening of the economy, we saw further improvement in domestic demand, especially private sector spending, and our export sector continues to grow at double digits. So, secondly, the reopening of the international borders is expected to drive tourism activity further. Tourist arrivals, according to my statistics here, have more than tripled in the first 2 months this year compared to the same period last year. At the same time, we are also seeing an acceleration in airport passenger traffic since October last year. And the recent data show that this have surged by 5 times year on year. So thirdly, growth is expected to be lifted by expansion in private sector spending amid continued policy support to household and businesses, and as labour market continues to improve. The unemployment rate has also come down from 4.6% last year to about what we have projected thus far, about 4%.